Okay, hello everyone, and welcome back. My name is Greg Furman, and this is the Vantage Point AI Market Outlook for the week of August the 18th, 2025. Now, to get started this week, we're going to do things a little bit differently yet again here, leveraging the new Vantage Point ETFs for the Forex market along with other markets that are correlated to the dollar. So what we'll look at here first is the UDN, or excuse me, the UUP, the dollar bull fund, and we're going to directly put it up against the USDU. Now, the reason for doing this is that there's a different calculation on the dollar index between these two. One is heavily weighted to the euro, the other one is not. So when we look at the UUP, it looks quite bearish, and the indicators are still pointing down. But we do have an MA diff cross below the zero line. But we can assess here, we've had a couple of false breaks on the predicted RSI trying to show downward momentum, but there doesn't appear to be any. So we can analyze where the key levels are on this. The T-cross long, 27.42. Now what's particularly interesting here is that we're above the quarterly opening price, suggesting the dollar is doing pretty decent in this quarter, which it is. Now, if we look at it here, again, with that UUP, if we take a look at it from the dollar bear fund, the UDN, the dollar index here too is running right along the monthly opening price, but also below the quarterly opening. So in comes the wisdom tree, Bloomberg, US dollar bull fund, and we can see that it looks quite different here. We have an actual medium-term crossover. We have an MA diff cross, but right there you can see that we're moving above the zero line. We're significantly higher on the predicted RSI. We have never broke down below the 40 level. So this paints a very, very different picture, and that is the whole concept behind the USDU, to show global foreign exchange transactions related to the dollar, not just how it's doing against the euro and a few other pairs. So I would respectfully submit that the dollar does still carry some bullish weight while above the quarterly opening price at 25.77, but more specifically the T-cross long at 26.28. That's the one we want to keep an eye on. So I'll revisit this again in next week's Outlook. But I will point that the closer we get to September, the more likely it is the dollar is going to rally. We've had a arguably hotter CPI number on a year-over-year core, and clearly the PPI number was much hotter. So the media spinning things into a 50 basis point cut in September, I think it is incredibly unlikely. We would need a lot more data to confirm that. But the main thing I wanted to show was the difference when using these ETFs, how they do their calculations. And then some of that's going to be with, currency forward swaps. There's going to be, again, global foreign exchange transactions with a different basket of currency. And this one is actually saying the dollar is showing some gains here. And that's after a significant down day on Friday. So how does this relate to our gold contracts using the XAU USD? Well, again, gold is, if the dollar is weak, is what they're telling us, we can see that Vantage Point is clearly not in support of that theory. Gold has actually been moving lower the better part of this past week. The MA diff cross, now we've got a clear medium-term crossover to the downside. So our monthly opening price here, at 32.90, I anticipate not only will that be tested, but there's a very strong possibility now that that level will break. Because again, the media putting a big spin on a much softer CPI number when in actual fact it wasn't. Again, I will always look at the core CPI on a year-over-year basis. And it went up, guys, not down. And the media just kind of blacked that one out and said, oh, that's just an anomaly or whatever. But once again, gold would be reacting very positively on even a quarter basis point cut, and it's actually not. So again, remember what I've tried to say to everybody is that there is that period of known dollar strength, real US dollar demand in the US fiscal fourth quarter. near the end of that, which we are in now. That will end October 1st. So again, gold still showing not a lot of downward momentum here. Using a 60-40 split with the predicted RSI, we're looking to trade momentum, and we don't actually have a lot of downward momentum on gold just yet. So we'll see if the monthly opening price can hold 32.90. That is the key level to watch this week. Now, I'm going to jump over to Bitcoin here. Again, Bitcoin making a big spike up on the CPI data, but you can see that that didn't last, and then it gave it all back on the PPI data on Thursday, which we worked on in the live VP room. But once again, using that predicted RSI, the question is, do we have momentum on the downside here? So in most cases, mid to late September through October is a very, very good time to buy Bitcoin. Mind you, last year it didn't do too bad in the month of August, and it's done pretty decent this August too. Structurally speaking, yearly opening price 93, 804, 107.598. That's our retracement point here, guys. I believe we can retrace back down to that as early as next week, but we would be prepared to start buying between 93.804 and 107.598. So we'll see what next week brings. But when we look at the VP indicators, I'm looking for downside momentum, a break of the 40 level. I'm not going to buy it because it's oversold. When I will buy based on an oversold, I need a confirmation that I'm actually moving higher. I need a low point. Then I need to see price rising, get above the 50 mark right here. As soon as it breaks above the 50 on the VP predicted RSI, I will buy at that time right there. Now I have confirmation I'm going higher. But picking tops and bottoms based on the standard methodology of 80 is overbought, 20 is oversold, not the best play in my respectful opinion only. So again, we'll watch these levels very, very closely next week, but slightly favors the dollar the closer we get to September 1. Now, looking at the SPYs going into next week, the equity markets in general, we've got a top forming here now, or a new verified resistance high, 646.19. That's the level we need to break above. The equities did have a good week, but they gave a little bit back on the PPI number. But right now, there is a very ominous signal there that's forming. The pink line, which is the strength of the medium-term, VP medium-term cross, against the long term. So we're looking at two different time frames at once, and that is warning that we're coming lower. So the first support level would be 635.59, which is our T-cross long. We'll see if that level can hold. But I do anticipate 626 to be tested as more data comes into the market to make a decision of whether this Fed is going to cut. I believe he will cut a quarter basis point, and then he will say, that's it, until I have more data or we have more data coming in. And it'll be interesting. We'll need a labor report, plus we'll need the PCE data coming in before we can make a stronger assessment. So the predicted RSI here is an overbought territory at 85.2, but that is meaningless, guys. Once again, the MA diff cross, that's telling us we've got a corrective move lower coming, and then we reassess once we get down to our T cross long. Doing a comparative analysis to the DAX, and last week I had warned that if that DAX, or excuse me, if the Euro US moves higher, it is likely going to pull the DAX up also, and that did occur. So the intermarket correlation is still in play here, guys. But again, looking at that wisdom tree dollar index from their viewpoint, that suggests that the euro may struggle here, and if it does, that would put pressure on the DAX. So your retracement point there, longs are still in play well above 44.79, but this ETF has been very useful if used to trade DAX futures too. And I talked about in previous outlooks, but there is a warning sign again. The pink line crossing over the blue line. So that's not, when it comes to intermarket technical analysis, guys, this is not one trade. It's potentially two, meaning shorting Euro US and shorting the DAX. That's the way I would look at it, but they're feeding off of each other right now. So if that euro comes under pressure, you know that this DAX is the same thing is likely going to happen to that. So again, we'll be watching that level very closely, but 43.22. I believe the euro goes lower in September either way, based on real dollar demand. But there are warning signs that that could happen as early as next week, which would pull this one down. So then again, we do a comparative analysis to the short-term VIX futures ETF, and we can see we're looking for any signs of trouble here. And sure enough, there is one right there. Because always remember, guys, this outlook is being done on Sunday morning at 11:46 a.m. Eastern Standard Time. This is an outlook, not a recap of something that has already taken place. The whole idea of doing this outlook when the markets are closed, the reason for that is so you can prepare for the week, or you have some idea what could be happening despite what some other conventional indicators are saying. So again, we've got a new verified support low on this. That's coming in at 37.67. Watch that level very, very closely. The neural index, we've got a warning sign. We've got an MA diff cross. And right here, all I need is to get that RSI above 50, but we're already, you can see we're rising up off that new verified support low. So keep a very, very close eye on that one, because I think there is a long play on this one. Now, for oil contracts, for the energy side of things, right now, you can see I put that trend line in from the presentation a few weeks ago. I've left the trend line in there. Structurally, this is starting to look very, very bearish. The monthly opening price up here, the yearly coming in at 76.84, and even this week, we couldn't get above the weekly opening price. However, and there is always a however in trading, is these two tools are very conflicted. The MA diff cross, I believe that this is warning of a corrective move higher only, because the predicted RSI, as you can see, is coming into the 50 level and it's pointing down again, the neural index. So it's suggesting that, again, that oil is still in some serious trouble here. So again, the market's going to be waiting to get more economic data. Is the US going into a recession? All of these things, guys. So continue to monitor it week to week. This is a weekly outlook, not a monthly, not a day or two, and it's not a recap of something that's already taken place. It's intended for 1 week and 1 week only here. So for now, oil, I believe, can correct higher, but that's where it is likely to fail, up at the T-cross long at 74.79. Now, looking at a few Forex pairs here, again, the reason I focus heavily on the dollar index and then bringing in the wisdom tree Bloomberg dollar index, which I really am starting to warm up to, is to get an idea of how the Forex G7 Forex pairs are going to do against the dollar, because that's the one thing they all have in common here, guys. They're all trading against the US dollar. So the top of the pile of that trade will always be the high volume Euro US pair. And as you can see, we're getting a lot of resistance drawn into here. And I'm looking at the VP indicators. There's the MA diff cross to the downside. The dollar index has a MA diff cross to the upside. These are 100% inversely correlated. So right now, the euro has some real work to do. 118.30 is the highest we've had. Then we've come back up, made a lower high at 117.89. And then the most recent high from this week is 117.30. So we're not making any new highs up here, guys. That's the fact. We've got an MA diff cross. I believe the euro will have one more bout of strength before the dollar kicks in. So be careful up here is what my advice would be. We will be coming out of summer trade very soon, but for now, I believe that the euro, a short, is a reasonable play as long as we're not, holding above 118.30. That's how I would leave that. And then again, the counter to that one is U.S. Swiss franc. This one is one to keep an eye on here, guys, because again, it's about a 95% positive correlation to the dollar index, and you can see that it's struggling on both sides, but we're above the quarterly opening price at 79.30. Long still reasonable, while above that particular level. Okay, but again, that dollar strength, we're still a week and a half away. I would argue towards the end of the month is where I would expect the dollar to start gaining momentum. When we look at the British pound, again, still a US dollar based trade here, guys, part of the G7. The quarterly opening price, 137.33. This is a retracement higher. That's pretty much for now all it is. Again, that MA diff cross in Vantage Point is giving us a warning sign while the financial markets are closed, I might add. Haven't even opened for the week. And again, another up day on Friday for the British pound, but the VP indicators are showing true divergence in my respectful opinion only. So keep an eye out for that, but that is a warning sign to be careful up here. Now, the dollar yen, with the dollar yen, again, a lot of eyes are going to be on this with the Fed and the Bank of Japan. And right now, the dollar is still holding its own while above 144.04. But be careful with this one, guys. If the market starts to unwind the carry trade, then this could fall very, very quickly. I'll be watching for any comments from the Bank of Japan if they are talking about hiking rates. Because what could happen here, the Fed cuts, Bank of Japan talks about hiking, that could set off a wave of volatility on anything with Japan in it, because they've been buying, using the Japan currency as a funding currency for many years now. And when it comes apart at the seams, it comes apart very fast. So be cautious with that. But for now, it's still a loose buy signal here in VP on their core indicators. Their trending indicators and their contrarian indicators are suggesting that there's more upside potential here than downside. But I would argue, respectfully again, that we are trading between the monthly opening price at 150.77 and the quarterly opening at 144.04. That is a true range to deal with here, guys. That's where we've been basically the entire month, trapped between these two levels. And right now, we are almost right on the 50% mark of this particular range. So when I look at it from that perspective, an argument could be made for a long trade, easily, actually. Now, when we look at the US-Canadian pair, I really don't have any reasons to buy Canadian dollars at this particular time. That's the best thing I can say to you. I am domiciled in Canada, but there's just too many negatives at the current time. No trade deal in sight between the US and Canada on the tariff side. So again, when we look at this, we've spent the whole week banging off the VPT cross long, and every single long trade worked. That's all I need to see, guys. The T cross long 137.56. That's our key level, but I would argue strongly that this is a long trade only while above 136.08. Now, I will concede if we can't break 138.55, and I will further concede that the primary trend on this pair has been down, but it's not about Canadian dollar strength, it's about US dollar weakness. But right now, the dollar is faring pretty good against the Canadian dollar. It's holding above 136.08. Longs again working every single day. All we're looking for is momentum to start to build. The pink line, which is the medium-term trend against the long-term trend, has crossed over on Friday, suggesting that we are going to at least test this 138.50 area. But if that breaks, then 143.80, I'm confident we're not going to hit 143.80 in August. But we could start moving towards that in September. So this could be the breakout play that we're looking for on the long side right now. Now, when we look at the Aussie going into next week, once again, the Aussie is struggling. Another thing that warns us with the US-Canadian pair, shorting it, be careful. So I believe we're going to come down to 64.27. I believe the Aussie will do quite well in October and November and December of this year. But I'm not convinced it will do very well for the remaining part of August or September. So the T-cross long, very important level for us, 65.13. We're struggling all along here. We pushed towards the quarterly opening last week and failed every time. So again, I think that we'll be looking at a break of that and then moving back into our verified support low at around 64.19. And assuming we get to that by next weekend, I will reassess next weekend whether longs could be reasonable at that level or not. But I suspect we've got a problem There is our MA diff cross right there, also occurring, but we're not, there isn't, as of the finish of last week, there isn't any downward momentum. This reverse check mark here, which I've talked about over the years, is a warning sign. And there could still be a long trade here, but I need to get above this quarterly opening at 65.81 to be perfectly blunt for me to hold longs on this pair for any length of time. And it did get a boost from the extension on the U.S. China tariff or trade negotiations for 90 days, I believe. So that's keeping the Aussie afloat. But it's not really doing much for the Kiwi. The Kiwi is really has kind of struggled a bit with this. When we look at the New Zealand pair, it's been the weaker between the Aussie and the Kiwi. The Kiwi's been much weaker, but I believe the Kiwi will have good value, very, very good value going into the normal fiscal fourth quarter when we start in October. That this could be a real discount buying the Kiwi in several weeks from now. But where we're at right now, it is pointing lower. The MA diff cross there too. But remember, guys, everything is based around the dollar. You're either buying or selling US dollars against these select pairs. So it will be another, I think it's a lighter week next week for economic data. The week after is the one we've got to be careful of. But regardless, we are nearing the end of summer trade, and there's still, with that, will be opportunity. So with that said, this is the Vantage Point AI Market Outlook for the week of August the 18th, 2025.